Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, daily chart, and you can see this is yesterday's candle. Big old hammer, okay? We came down in the morning right off the open. We printed 1775 in the Globex. For those of you that follow fibs, there's a big fib level down right around that area, fib extension. It was retested off the open at 18. So, whatever your persuasion is, you've got matching lows down there. You've got a double bottom. The issue was, what were the bulls going to do with it? Once they got up over the top of 27 to 29, which coincides with the 50-day exponential moving average, and what had proved to be a tough nut to crack on the overnight, they were able to get through that, and from there they rallied as high as 41.5. The weekly pivot is up at 51.67, not too far away from the blue line here, which is your 9-day exponential moving average. The green line up here is the daily mid-band, the 20-day simple moving average. We're still in sell rallies mode, okay? You can't sell a rally without a rally. So we're rallying. Now, one of a couple of things is going to happen here. This rally is going to find a high. It's going to start to build some more reliable lower highs, and at that point, you can short it. I don't like shorting bear market rallies early, because then, congratulations, you are the squeeze. And what ends up happening is you'll be getting out right when you need to get in. It sounds counterintuitive, and I know it's hard to do, but being long is the way to be. Go with the flow of the tape. Be long, understand you're in a sell rallies market and you're long, so that your counter trend. Take your profits, roll up your stops, and take advantage of the move. Don't be a stubborn short. A lot of stubborn shorts in this candle right here. A lot of stubborn shorts. A lot of people that just said it's going to come back down, just like it came back down on Thursday, just like it came back down on Friday. Well, it didn't come down. Okay. It's a different kind of day. This is a different kind of week. We don't have dominant news flow, at least not at this point. So you have to adjust to that. As we go over to the hourly chart, you can see the matching lows here, 1775 and 18. Marginal higher low. I almost didn't put that down. The real higher low is right here. 27.29 was resistance. The last time I wrote this was happening here, okay? And you have to imagine the 50-day exponential moving average kind of cutting across the top end of these candles. But when they converted it, about 11 o'clock, and they confirmed 28 to support, I was short. I was short the 28s because I was looking initially for this to hold and to make a lower low. Once that didn't happen, it was time to get out of a 28 short. I took a couple of handle loss and get into a 28-20 half long. And the 28 half long, we did, we split it in thirds. We did 2 and then 6 and 7 for 5 handles. You have to adjust your approach in order to take advantage of what the market is giving you. So once 27-29 got converted, they squeezed them up the rest of the way. We made a higher high in the overnight. We're pulling back now. I'm flat. I was long 36, and I flattened out of the rest of it after I woke up this morning. I wanted to see if I kept it on because I wanted to see if I was going to wake up to 51, 52. It was not out of the question, but it can only do 44. So bears must hold weekly pivot, okay? You've got the weekly pivot here. You've got that old 54 area, which way back here to the left was double bottom support that launched us up to 2401 and then became resistance last week, Thursday, Friday. Fail level on Thursday, fail level on Friday. The bears have to hold here. They want to hold here, okay? As you get up into this area, you've got the daily mid-band. They have to hold that. What are the consequences for losing that? Well, you're left with a buy dips market. If you get into a market where the E-mini wants to trade between the green line and the yellow line, between the mid-band and the lower band, that for us, by definition, is sell rallies. If you use sell rallies as a general proposition, you're gonna do well. What we've seen, though, over the past, several months is this has been a market that has wanted to trade between the green line and the upper level. This is all buy dips. And anybody that traded that market understands that buy dips was certainly the way to go. So watch that dynamic. It's going to be important what happens if price comes into 51 to 54, and if it gets through there, 63. They really need to stop it here, because at this point things start to magnetize and you got bears sitting around going, oh, here we go again. And the dip buyers, the dip buyers taste blood, and off we go. So today should be a very interesting day. Ideally for the bears, it stops right here. You head back down and you start testing lows again. That would really take some of the wind out of the bull sails. Okay, everybody have a good one. I'll see you for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.